discussed, let's get into corporate conversations. We have the management of Kalpataru Projects joining us on the show, Mr. Amit Uplenchwar, the director at Kalpataru Project International, joining us on the show. Mr. Amit, hi, morning. Thanks so much for joining us. Let's first talk to you about your earnings. Yes, we've seen double-digit growth coming in on the revenue, but the net profit and the EBITDA margin have slightly been soft and to some extent missed the street's estimates too. Talk to us about what went on in Q3 and more importantly, what is the outlook on margins going ahead?
Thank you very much for having me. We've in fact, I think one of the best quarters up to now at KPIL and 9-month FY26. If you see, we've already reached our order booking target of around 26,000 crores, including L1s. We had guided that we should try and strive at the beginning of the year to get our margin profile up by 50 basis points on standalone and 100 basis points at a console level. And at the end of 9 months, we are already 110 basis points up at our margin profile on a console level and close to 80%. So we've beaten actually our own estimates that we had guided at the beginning of the year. And looking at where we are, the balance few months left for this FY26, and I think we should be able to beat our higher end of the margin guidance that we had given. We've had a robust revenue growth as well at close to 30% with 27% and 28% both on revenue and standalone, at standalone and console levels. And I think that should get us to the top end of our guidance band of 25%, both on standalone and console at the end of FY26.
All right, good to know that. But Amit, just wanted to get a bit more sense on your water business specifically. We believe that continued to remain impacted due to some delays in the release of the funds from clients. If you can help us with the latest update there, when are you expecting your clients to clear that, and what's the outlook going ahead?
So, whilst all our businesses have grown tremendously well, as you can see from our revenue overall at the end of 9 months. Water business, yes, was a two-part problem. One, we ourselves have been very cautious on growing that business from a revenue perspective, given the fact, as you know, it's an industry problem. There have been issues with collections as monies were not coming in. These are all essentially central government funded projects. And our receivables there have been upwards of 1,000 crores. However, things, as you saw in the budget as announced by the Honorable Prime Minister, have retained their budgets for this year as well as next year in terms of giving out monies towards water projects. End of Jan, we've already collected in the month of Jan close to 220 plus crores from the water projects against our old receivables. And if we look at the same trend continuing, I would hope that we get another 500-600 crores in the Q4 of this year.
Okay, so that's the take on the road ahead. But also talk to us about where your order book stands right now. What has been the pace of order wins in Q3? And more importantly, what is the execution timeline of your current order book?
So most of our orders range between, 25 to 35 months. And currently we are sitting at 63,000 plus crores of order book with almost 7,500 crores of favorable L1 orders, taking our current order book to including L1s of in excess of 70,000 crores. I think that gives us a very good visibility of the next 2 to 3 years in terms of orders already. Our margin profile for these orders, because they've been our business is cyclical. 3 years back, transmission was on a slow pace, and now the transmission building and factories, oil and gas is growing very rapidly. And as legacy orders have closed out in the last 12 months, these are preferably with better margins going forward in FY27 that will help us grow our margins also. So I think from an order book perspective, we remain very, very bullish. Our transmission, both in India, overseas, oil and gas, building and factories, urban infra, all businesses are showing, a lot of growth, and the prospects are immense. Given the fact that the trade deals have been signed, there is certainty on tariffs, and the level of volatility seems to be coming down. I think that should augur well for FY27 from the more stability in the markets, and obviously translating that down to commodities as well.
All right, Amit, very quickly, if you can give us some sense that with a 37% international order book exposure, do you expect any potential tailwinds from the recently signed deals, and what's the outlook? A quick one.
So I think oil and gas business always favors expansion by capex by oil companies once they see stability in the markets. And I think, as you mentioned, this tailwind could come from these trade deals that have been signed with India and both by EU and the US. I think that should help faster order giving of by these international oil companies. So that's one plus. Plus also the transmission capex, I think, will accelerate both internationally and domestically, and that should also give us tailwinds in high margin order booking going forward.
Okay, Amit, on that note, we'll let you go. Thank you so much for taking the time out and joining us and explaining to us what your Q3 has shaped up to be, and more importantly, what your outlook is. Thanks so much for your time.
Thank you so much.
Okay, viewers, shifting focus then, let's